All right, welcome to Talkin' Investing. I am Tom, and as always, this is not financial advice. Today, I want to talk about the stock market overall. I want to talk about the fact that we're still teetering in a bear market. I want to talk about the fact that this is a very, very choppy market, which makes it a dangerous market. There's opportunities, but there is also danger. I want to go through some of the things that I try and avoid doing in a market like this, because all too many times people act on emotion and they act on panic, and as a result, they end up losing all of their money in a market where they really could have preserved their capital and waited for a better day. So I want to take a look at the markets. I have a list of do's and don'ts, and today I'm going to focus on the don'ts. So first, let's take a look at the market. We're down across the board today. The S&P is down about 0.5%. The Dow's down about 0.5%. Nasdaq's down about 0.75%. Russell's down almost 1%. Oil is up to $118, so that's starting to get a little high. It's been fluctuating mostly between 100 and 110, so it's popping up a little bit outside of that range for now, which is going to create some downward pressure in the rest of the market. Okay, this is the S&P 500, so this is the broadest measure of the stock market. So first I want to show you we've had a series of lows in 2022 in the market. We are now at the end of May. Today is May 31st. It may be the first time ever that January, February, March, April, and May were all down months. So that is a very difficult way to start the year. You know, we have not had a crash, but this is clearly a downward pressure market. Last week, the Dow and the S&P ended their losing streak. They did have a little bit of a recovery rally last week, so these are the times we need to be most careful. So I'm going to talk about what's happened in the market, and then I'm going to talk about some of my strategies that I use to try and avoid losing money. The first thing, I want to note a couple of key dates, because this is really what's happening in the market. We bottomed out on January 24th. We then bottomed out again 1 month later on February 24th. Okay, so we then had a rally off of that of 7.5%. So I'm considering really all of these relief rallies, and that's where we don't want to get confused. Here's the second example in a row of where we've had a nice relief rally only to go back and retest the lows or hit lower lows. So a few weeks later on March 14th, we bottomed out again. And then the last 2 weeks of March, we actually had a very big rally. This was almost 12% rally. And that was the last good rally. April and May were the 8 straight weeks in the Dow that were down. So pretty much across the board, it was just 2 months of misery. On May 20th, we hit a new bottom and a new lower low on all the indexes. So that was a little bit less than 2 weeks ago, and since then, if we were to go to where we're trading right now, we're up about 8% from there. So again, we seem to be in the middle of what looks like maybe another relief rally. So at some point, one of these is going to be the bottom. We don't know when that point is, and there are a lot of people trying to call the bottom. So that's my number one don't. Don't try to guess the bottom, because you're not going to. You know, you may be the 1 in 100 people that gets lucky and happens to accidentally guess the bottom, but there is no magic chart that tells us when the bottom is in. There's just too many variables in the stock market. So there's a lot of things that can stall or derail or delay what could be or should be a bottom from a lot of technical analysis standpoint. So the technical analysis alone does not really give you answers. It gives you guidance, and that is important to understand. So when you see any one indicator, particularly if you're looking at just one indicator, that is not enough to understand what's going on in the market. And even when a lot of the indicators start to say the same thing, that's still not a guarantee that it's going to happen. So number one, don't try to call the bottom. My number two thing, and it really should be my number one thing, the absolute most important thing to do in a market like this, we are now 6 months into downward pressure in the market, is don't panic. There's two things people do when they panic. They panic sell and they panic buy. Both of those things typically end up losing you money. And so if you have good companies and if you believe that they're going to recover over time, really, you have temporary losses on paper. And what you don't want to do is turn those into permanent losses by panic selling. On the flip side of that, you don't want to panic buy. So as soon as a stock changes momentum and goes up, you start to buy it not on the dips, but on the rises, and chase after it. And typically, as we've seen, these relief rallies are fairly short. So if you're chasing after it, again, you're probably going to end up buying high again and holding low, and there'll be that temptation to panic sell low. The other thing you don't want to do is what I call doubling down. So in other words, you've lost a certain amount of money and you say, you know what, the only way I'm ever going to get this money back is if I just double down on what I'm already in and buy a bunch more. That concept basically represents gambling. And it is very different than dollar cost averaging in. which is something that I participate in and I know is extremely common philosophy to use in the market. Because we don't know when a bottom is and because we don't know when a top is, then you're not panic buying, you're not panic selling, you're doing something methodical and you're sticking to a plan. If you basically double down at the wrong time, then you're going to use all your extra cash on the sidelines and you're not going to have any money if there's another dip or series of dips. So the most important one on the list is number 2, don't panic. Number 3, don't put money into the stock market that you cannot afford to lose. So if you already have money in the stock market that you can't afford to lose and you've lost it, even in that instance, the worst thing you can do is put more money that you can't afford to lose in there. So at some point you have to stop the bleeding, regroup, re-strategize, and if it means starting over, it means starting over. But there's a saying called throwing good money after bad. So, for me, that's a personal rule. It's important to not put money in the market that you can't afford. So in other words, if you need that money in the next 30 days, 90 days, even the next 1 year, it probably doesn't belong in the market because the market can act irrational for a year or longer. We are now 6 solid months into a downward trending market overall. We're over a year into a downward trending market for the small cap high growth stocks, and they have not really yet flipped. So some of these are down 80, 90, 95%. Okay, the last one I'm going to go through is just say don't abandon your plan. Hopefully you had a plan when you went into investing. If you didn't have a plan, then I would take a time out and make a plan. And what that means for me basically is it means doing your due diligence and understanding the stocks that you buy. That way, even if they continue to hit a series of lower lows, if you know that fundamentally the company is operating well and doing well as a company, the stocks don't always act like the companies do. So those can be 2 different trajectories in the short term. If you've made a plan and you've done your due diligence and you're holding a good stock, I try to hold those stocks and not sell them at the bottom. So stick to a plan, or if you don't have a plan, from here, try to make a plan. Remember, we are where we are, so we can't go back in time and make changes. All we can do is try and strategize from here going forward and try and avoid some of the very common mistakes that people make. And some of these probably sound simple, and this probably is review for almost everybody, but I just think it's worth hearing and reinforcing to yourself over and over that these are the behaviors that work over the course of the long time in the market. So again, none of this is financial advice. I cannot tell you what stocks to buy. I cannot tell you what stocks to sell or when. That is why your plan is important. You need to do your own due diligence, make your own plan, stick to the plan. So these are some of the behaviors that I try to avoid in a down market. I do think we are in a very choppy market. I think we're close to a bottom, but we don't know what that means. How long are we going to bounce off of a bottom? We may still revisit our lows or hit lower lows. So these are some of my personal rules that I try to use to avoid losing money in a down market. So the key is preservation of capital, and the key is to use wisely the money that you have on the sidelines or the money that you earn that you're able to put into the market. So best of luck, everybody. Remember, do your due diligence, invest wisely, and we'll weather this choppy market, and we will get to the end of this sooner or later. So if you made it this far, remember to smash the like button and subscribe to the channel. Thanks again so much for watching, and we will see you in the next video.